In today's video, we are going to go over some of the pitfalls and situations that make it seem like you are gambling with your investments, and we're going to give you a little bit of warning about the potential of really just taking the wrong steps when it comes to your investments. Hi everyone, my name is Helen. Welcome to my channel. In today's video, I'm going to go over some of the things that make it so that you are gambling with your investments, and really this is just a video that is warning you about the potential pitfalls that may arise when you are investing. Now, I want you to keep in mind that you do not want to gamble with your investments. And in this video, I'm going to explain what that means. If you like this kind of content, please do subscribe and hit the like button, as it really helps the channel to grow. The first point that I want to go over in this video is what is gambling as associated with investing. Now, investing is often referred to as a gamble by those who are uneducated on the subject because it seems very risky. It seems like you're making decisions and you can go one way, you can go the other way. You're really just making a guess. That is not actually true when you are investing. However, it is true if you have not done your homework. Now, when you want to avoid gambling with your investments and really taking very high risk that you don't have to take, the first thing you need to do is learn about the investment that you're planning to buy. Now, investing is very different from other things because the amount of risk that you take, the amount of potential losses or potential gains are very different based on what you are choosing to put your money in. There are risks in all investing. However, certain investments do tend to be a little riskier when compared to other options. Now, it is a gamble in investing if you are putting all of your money into high-risk investments and you don't know what you're doing. If you're looking at, I'm going to buy equities, I'm going to buy individual stocks, and you don't learn about that stock, that company, and what you're investing in to begin with, you're going to find yourself in a situation where you just don't have any money left because you've lost everything. Or maybe you might win, but it's going to be a luck of the draw type of situation. You do not want to be in that situation. My second point when it comes to this particular topic is that you want to always look at your investments as an investor. You don't want to look at it as someone who's on the outside. Now, what do I mean by looking at your investments as an investor? That means you are looking at the risk, of course, but you're not looking at the risk and just ignoring what you are getting for that risk. That means that you are looking at it as an asset. Now, when you are investing as an investor, you are not looking at your investments as, this is a high risk, this is a low risk. I'll just go with the low risk every time because that is a safe option. You're looking at the overlying asset as it is. There are things that seem very high risk when you just look at the chart. This company is up and down, very volatile. That does not mean that the company is bad in all situations. Sometimes it just means that the company's products can be a little bit cyclical. For example, maybe they have sales in the winter or the summer specifically, and that causes the company's profits to go up and down. But the product itself that they sell is very popular. It is something that people need all the time. Well, then it's not really a risky investment, but the way that the charts may show it seem very risky just because it is more seasonal. In other situations, maybe the investment that you're looking at is an asset that is somewhat volatile simply due to the nature of the type of asset. This is very common in technology stocks, for example, which do tend to be a little bit more volatile due to the nature of technology itself. As new technology comes out, companies may see their stocks fall, they may see their stocks rise as they're coming out with new ideas, new products, and it is a very, very innovative area of finance. It's a very innovative area of business. That means that your investment should be looking at what it is they're producing, what is the asset, what is the company itself, and how is the company going as a whole, rather than looking at it just solely from the charts and just solely from the baseline volatility. You want to take your time and evaluate your investments and from all angles before you buy so that you are able to make an educated choice about each individual stock or each individual company or whatever other investments you are buying. make sure that you know what you are buying before you buy, and focus on it as an asset, not as an item that is just going in your portfolio that you know nothing about. The third way that you don't gamble with your investments is to diversify your portfolio. Now, this is probably the most common advice that you are going to hear from anyone in the finance space, whether you're talking about a traditional finance guru, whether you're talking about someone who's just knowledgeable about the subject, or even just anyone who invests at all. The key to any investment is to diversify your portfolio. You never want to put all of your eggs in one basket. Now, for people like my husband and I, we invest primarily in equities right now, and that is a personal choice. But when we're investing in equities, we're not investing in a single company. We are investing in multiple companies. We invest in the S&P 500, for example, which has 500 companies. Or we invest in individual stocks, but there's multiple stocks that we're investing in. Now, I know that many people feel uncomfortable with investing in equities, or maybe you don't want the entirety of your portfolio to be in equities. In that case, you may put some in equities, some in bonds, maybe some in real estate. But the point is, you don't want all of your investments to be in one thing. And even in the real estate market, you don't want to put all of your money into a house, but not consider that the market may go up and down. There's still volatility there. So always keep in mind that when you are investing, you want a diverse portfolio that includes multiple asset classes, multiple different things, and maybe something to hedge against risk if you have any risk aversion. So if you're worried about, oh, the stock market is risky, maybe you invest in some bonds, or maybe you invest in real estate as well as a portion of your portfolio. And in that way, you're not taking major risks with your money as a whole, and you're able to offset some losses whenever losses do occur. The fourth way that you don't gamble with your investments is to recognize that you need to be using caution when you're working with high-risk investments. Now, high-risk investments are one of those things that you could potentially make a lot of money, but you could also potentially lose every single penny that you put into it. So you need to use a lot of caution when you're looking at something like stock options, or maybe you're even considering cryptocurrencies and you're looking at some of the lesser known cryptocurrencies. The point that you need to keep in mind is that if it is high risk, you need to use caution. As a rule, it is far better to get rich slowly than to take the path of trying to get rich quick. A get-rich-quick scheme is almost never going to work. It is a straight gamble with your money because you are trying to jump the gun. You're trying to invest in something that may not even be a proper investment. You may be putting your money into something that is essentially just straight gambling without realizing it. So when you are looking at any kind of high-risk investment, use a lot of caution. Think of that as a gamble. And if you think, okay, I don't know what I'm doing in this situation, the risk is showing very high, maybe you want to take a step back and reevaluate putting your money into that particular investment. It is important that you always keep in mind how risky something is and whether or not you have that tolerance for risk. High-risk investments can yield good results. However, they're also risky. They're not guaranteed to make money over the time frame that you want. And in some cases, you're not guaranteed to make anything. If you're looking at certain types of investments, it's either you gain something or you lose it all. And that's not something that you want to have happen with the majority of your money. So as a rule, take it slow. Really evaluate your investments. Make sure you're educated on what you are trying to buy, and make sure you look at everything as an investor. Make sure that you understand what you are buying, what is the asset, and that you are putting your money into things that are very important to you or that you feel are going to do well in the future, but not things that are a gamble. You want to be careful with your investments and be particularly choosy with what you are buying. That's it for today's video. If you liked the video, do subscribe, and I will see you in the next one.